Hi, I'm Steve Spencer from SMB Capital, and today's lesson deals with understanding what type of days you can fade the market and what type of days you probably shouldn't. And so what brings this video on, I actually had a discussion with a very experienced trader late this afternoon. He hit me up on GChat, and he was pretty upset with himself. And I said, well, what happened? And he basically decided to kind of go all in the afternoon, getting long as the market was coming lower. And so this was just not a day for that. And I kind of want to walk you through why in the morning I came to that conclusion. So we came in this morning and Europe was getting crushed. We have conditions where the market over the last two and a half weeks had run up from about 206 to 209, consolidated for a few days, and then broke to above 2012 the last couple of days and really was right at all-time highs. And so short-term extended to the upside on the SPYs, maybe not as extended as the small caps IWM, but certainly extended to the upside. So the conditions coming in today, we'd run up quite a bit the last few weeks. We had Europe getting crushed on the I don't even know how to pronounce it, the Great Britain potentially leaving the EU this month on the vote. And so those are things we've been talking about for the last month or so. As we got closer to that date, the market might show some nervousness. And that's a real catalyst. If Great Britain does leave the EU, that really is quite bad for their markets. Thus, they were down 2-3% or more today. And it's bad for us, but not as bad. But still a real catalyst. The other thing, from a technical standpoint, we gapped below the 211 on the SPYs, which had been kind of the support the last few days. And so we had those three things. We have a summer Friday. And the first thing I said when I turned to the trader to my right this morning was, and I smiled and I said, I don't think we're going to bounce today. And because of those conditions. Now, having said that, if we take a look, first of all, take a quick look at the 2-week chart here. You can see we were fading into that 209, 208.80 area. We did a video last week on that. Those were solid conditions. We broke to the upside. We started moving sideways. That's a consolidation. We like to fade into consolidations. Then we moved higher and we started to consolidate again. The difference here is, just from a pure technical standpoint, is we gapped below the most recent consolidation. So what you do in that scenario is you actually look to fade a pop on the open to the upside, getting short. So when I'm talking about don't fade today, I mean don't get long into the pullback. That has been what's been working over the last few weeks, but this was not the setup for today. And so the way that we looked about it and discussed it in our morning meeting was like, okay, we're below 211. People are not going to believe that we're really going down for real, because every time we've gapped down recently, the market's been bought, including on the jobs number day. So what you'll look for right on the open is, once there's some profit taking on the open, if we get close to recent areas, in this case in the low 210s, look for some sort of pop, but fade when we get close to the 211 level or the pre-market resistance. And you can kind of see very clearly on this intraday chart, we initially, after coming into 210, popped up to around 210.80, pulled in a little bit, went to 210.80 again, and then failed both times, never got above 211, which that would have been something different. If we got above 211 and held above 211 for 20-30 minutes, and started to move higher, I would say, hey, maybe the high for this week can get tested. But until we get above that key level, you need to be thinking about lower prices. In the afternoon, where this trader got themselves in trouble, I believe, is we came back down to that morning support. We tried to bounce. You can see it was a very, very minuscule bounce, and then we took that out. At that point, you're out, you're short, whatever the case may be. And so you want to understand that all days are not alike. And this day was different for the reasons I mentioned at the top of the video. Market extended, gap below the support level, that was real key. And then real catalyst, if you take a look at all these European markets, they're just getting destroyed. So you see Europe down 2-3%. We're only down 0.5%, 0.6%. In your mind, you need to say, we could come off 1% today, 1.5%, maybe even 2% if it's a complete bloodbath. And you can't act as business as usual, especially in the afternoon when we take out the morning low. So hopefully this will help you in the future if you're one of those people who got caught up in this scenario and actually faded on the long side. And next time you'll get short, and press those shorts when we take out the morning low. Thanks.
Become a member of our trading community by joining SMBU Premium. Each month, as a community, we'll work together to improve our trading with a shared hour of learning. On our trading desk in New York City, the best traders continually grow. In fact, the best traders trade to grow. SMBU Premium is packed with 12 webinars, one a month, focused on market-specific trader training that will help you become a better trader by the end of the month. Invest in yourself, invest in your trading. As I wrote in the playbook, tomorrow you can be better than you are today. SMBU Premium, how good can you be?